typically because the old government is so indebted, there's no chance of it repaying its debts. There's no more trust in the currency. There's no more trust in its ability to repay its borrowings. The investors will no longer fund the government for its wars, for its social programs or anything else by lending it money. So they have to restart the system with a promise of, we'll never let it happen again.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for February 26th through March 4th, 2024, while supplies last. First, we feature backdated 1-ounce silver maples at $3.39 over spot. We also have 1-ounce gold Valcambi bars at only $59 over spot. And finally, we're offering our choice 1-ounce Palladium bars at just $119 over spot. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And with us today, a new guest actually introduced to us by our friend Mario Eneco, Clive Thompson, retired Managing Director of Wealth Management, formerly working in Swiss private banking. Clive, thank you so much for taking the time today.
Elijah, thank you very much for having me on your show.
Well, it's great to make your acquaintance, to meet you here online. I've watched a lot of your interviews with our good friend Mario Eneco at the Eneco64 YouTube channel there. And I was just blown away by, your wealth of knowledge in the banking system. And I'd really like to get your perspective right now, first on the banking system, because last year, obviously, we witnessed a banking crisis in the US. We also had UBS take over Credit Suisse over in Europe. What is happening right now, and what should people, are there things that people should still be concerned about when it comes to their money in the bank?
Well, let me start off by saying, I think you want to limit the amount of cash deposits you have in the bank. It doesn't mean to say you need to limit the amount of assets your bank holds for you. So there's a distinction between your bank holding securities on your behalf, and that could include treasury bonds or other kinds of assets like shares or funds, and holding cash. The securities they hold on your behalf are not held on their balance sheet, and therefore, strictly speaking, they belong to you. So in a bankruptcy situation, you would normally get your securities back, but you may find that your cash goes to the creditors of the bankruptcy, and you may not get all of it back, or perhaps any of it back. Of course, there will be in every country a guarantee by the government up to a certain amount. I don't know how much it is in the United States on the spur of the moment, but you probably know that figure, maybe 100,000 or something like that. But what's going on in the banking system right now? Many banks have a problem, and the problem is one of lending long and borrowing short. So we've been through a period when interest rates have been very close to zero, and in order to make some kind of money, the banks were quite tempted to lend that money out on a long-term basis. So they did two things with their money. First of all, they were buying treasury bonds, which might have 3, 5, 10 or more years maturity. And secondly, they were lending the money to corporations and to individuals for the commercial and resident personal lending for houses, for example, 25-year mortgages. Typically, these loans were for a fixed rate for a fixed period of time, and they're certainly in all cases not repayable on demand. The problem is, when interest rates started to rise, as has been happening, the value of those loans that the banks have made, their assets, go down in value. So, for example, if they bought a 20-year or 10-year treasury bond and interest rates rise from what was 0.25% before, now they're talking about 5%, the value of your bond is worth a lot less than it was. And likewise, if you have a mortgage which you've lent money to somebody to build a house or to buy a house at 3.5%, but now interest rates are on mortgages now 6 or 7%, that means your mortgage is worth a lot less. So the situation that we got at the moment in banks, not only in the United States, but around the world, that many banks have lent out money and taken in deposits. So the deposits are worth 100 because people can get them back on demand. But what they've invested it in is no longer worth 100. It might be worth 90 or 70 or some other figure below 100. And that's fine as long as the difference between the two hasn't wiped out their capital and the reserves. But some banks are not so well capitalized, and the assets or they've invested too much into these fixed term assets, and the assets they've got are now worth less than the amount of deposits their liabilities. The deposit of the liability, they've got to repay back the depositors, and it's worth less than the liabilities minus the capital reserves they've got. So what's recently happened in the United States, we're going back a year now, the American government said, the Federal Reserve said, we realize that lots of banks have got these bonds which have gone down in value. What we will do to restore the stability of the banking system, we'll allow you to deposit these bonds. Let's say they're worth 60%. You can deposit them with the Federal Reserve, and we'll lend you back 100. So you look fine. But this program called the Bank Term Funding Program has got a time limit on it. It's coming to maturity. So whether they'll extend it or not, I don't know. But the reality is, I think the Federal Reserve is prepared to let a number of banks go to default in the near future. They'll expect them to be taken over by the larger banks, and they'll bail out the investors in those banks, I think. But what it would be much harder to withstand would be a wholesale collapse of banking. If everybody starts to take their money out at the same time and run to the largest bank, that would be very hard to deal with. So my message to people is don't keep too much in the bank, but you should have at least the amount which is guaranteed by the government, and the rest put it into some kind of securities, so that if something does go wrong, your securities should be safe, albeit you might have to wait while they unwind the bankruptcy.
Now, when it comes to kind of the risks, and also you mentioned how really a bank run happens, right? You've talked about there's been a fundamental shift in the last few years, how people can take money out of the bank so quickly, just with a mouse click, right? So how does that change really that dynamic in the whole banking system?
Yeah. So if we go back to 2008, when Washington Mutual went bust, it took some weeks for the bank run to happen, because people, when they wanted to move a large amount of money, they couldn't just click a mouse and move it. They had to go down to the bank, fill in a form and a wire transfer form, and then the bank would wire their money to another place, wherever they wanted it to. Here in 2024, money can move at the speed of light. Not only money, but information and rumor. So when you hear a rumor about a bank, what do? Do you say, I'll sit back and wait and find out if this rumor is true? Or am I going to be the first one out the door? It's a bit like being in the cinema and you smell smoke. Do you sit back and say, well, I'll wait to see if it's really a fire? Or do you say, I'll edge towards the exit? Well, I think in the modern world, the biggest enemy of the financial system is the mouse. The mouse can literally move that rumor or that story around the world in microseconds, whether it be a true story or not. And along with it, the people who want to move the money can do so in microseconds. So we live in a much speeded up world, and that increases the danger of bank runs if a bad rumor starts to happen.
You mentioned how it seems like maybe the plan is, or the expectation is, that a lot of smaller banks will fail. Even Fed Chairman Jerome Powell said in a 60 Minutes interview that certainly some smaller banks will close, be taken over, etc. So do you anticipate that it'll just be the smaller banks, or if we do see even some of the bigger banks fail, what does that really mean when it comes to people's deposits and their savings in the bank?
I'll go with Powell's version of it, that some banks will fail and everything will be all right, and he'll bail us all out on the smaller banks. But that is the most likely scenario, but you can't exclude a much wider run in the event there's some kind of event which would cause that. Right now, we do realize that a lot of the banks are fairly fragile, but let's imagine we have another event which causes people to panic a bit more. I mean, it could, I don't want to speculate what it could be, but it could be an earthquake in California. It could be a collapse of the stock market. It might be a currency panic. It might be rapidly falling treasury bonds. I mean, these are all possible scenarios. I'm not forecasting any of these at all. I'm just saying there are scenarios out there which could cause people to run faster because the banks will suddenly be put in a much more precarious situation. And there is a limit as to how far the federal deposit insurance program could go. I don't have the exact numbers, but I have seen it quoted often that they only have enough money to bail out a certain number of situations, but not a wholesale banking collapse. I don't think a wholesale banking collapse is on the cards, but one must never exclude it. And that's why you have to be cautious and not have too much exposed to any one bank and not have too much exposed in the banks in generally.
Now, it seems like it's at least on the books right now that there could be bail-ins in the future. Do you see that as a risk right now?
Yeah, I think there will be. I think it's, as Jerome Powell said in the 60 Minutes program, there are going to be some failures, and the plan is for the Federal Reserve to look after it through I don't know the Federal Reserve, the Federal Deposit Insurance Corporation will look after it up to a point.
That's a good point. So it's like you said, really any amount above that insured limit seems to be at risk, I guess, by definition, but especially in these times now. One of the other topics that you've discussed is central bank digital currency. Do you think a banking crisis or a crisis in general, how do you think that could lead to the government rolling out this central bank digital currency, and what kind of impact will it have in our lives?
There's well over 100 countries working on bringing in a central bank digital currency. They're going to get a lot of kickback in some places, United States in particular. But there will be kickback. But some countries have already introduced the central bank digital currency. And I think we have to accept, and I say that with some reluctance because I'm one of those who would not be willing to accept it. I would vote against it. But I think we have to accept that probably they'll win their aim of getting the central bank digital currency introduced. Now, a lot of people, your listeners will say, there's no great worries about it. Everything I do is monitored. I use my credit card. I don't use cash anymore. So what's different? So I'm just going to talk a little bit through what's different and then how that could go wrong down the line. First of all, the central bank digital currency, the nearest equivalent of it is the cash in your pocket. It's not your bank's money. It's a direct liability of the central bank. And the central bank will be able to control the money in your pocket in whatever way it sees fit. Now, they do say they're not going to engage in monitoring and controlling and watching what you're doing. There'll be no spying, but I think you have to take that with a big pinch of salt. There's absolutely no doubt they're going to be looking over your shoulder to make sure you're not a tax evader, to make sure you're not a money launderer, to make sure you're not a terrorist. So for sure, the information will, even if they're not looking at you, the information will be stored away in case they need to look at you, and they'll know what you're doing. The second thing is, as the digital currency comes into play, most countries are saying we'll keep the cash. But we all know that once the CBDC is here, there'll be all kinds of incentives to encourage merchants and so forth to only take the CBDC, if nothing else, because it's more convenient. And it's inevitable that cash will wither away from daily usage, which, again, people will say, why do I care? It's more convenient for me. I can spend everything I want. But there's a lot of things we may not realize we're doing that we do with cash. And cash has got a great deal of conveniences. For example, when you want to slip a $10 bill or a $100 bill into an envelope for your grandchild's birthday. For example, you have that man who knocks on your door and says, "Can I cut your hedge?" And he'd like to be paid in cash. As you can imagine, he probably, in some countries, he might be an illegal, but it doesn't really matter. He might not have a CBDC wallet, and you won't have that facility. You might want to buy something which you don't want your spouse to know about. But if you have a CBDC wallet and it's the only way you can spend your money, and you have a controlling partner, that partner would be able to say, "Show me your wallet. What have you been spending your money on?" and be able to see that. So I'll give you an example. Let's imagine an abused housewife who's looking to hide away a little bit of the housekeeping money for her getaway. Well, she won't be able to do that. So there's, and you can imagine if I won't go on, but you can imagine many other situations far more complex than that, which could be problematical if we don't have cash around anymore. But why is this a worry for the population as a whole more generally? It's because the ability of the government to spy on you and ultimately to control what you do, and I'll come on to that in a second, can turn our society into a very dystopian society where everything you do is controlled through your wallet. So to give you some illustrations about what a CBDC will be, it is a programmable currency. Programmable means the government can decide whether you can spend it, how much you can spend on what. For example, maybe they'll say you can't spend more than a certain amount on toilet paper or whatever. I mean, I use that facetiously, but we all know when there's every few years there's a panic about toilet paper, and everyone rushes down to the shops and empties the shops of the toilet paper, and then we all talk about hoarding and things like that. But they might say you're on social security, and in our wisdom, you're only allowed to spend your social security check on food and looking after your children. You can't spend it on drugs, alcohol, gambling, or anything else we happen to disapprove of. And yeah, that includes chocolates and sweets and who knows what. It could go a long way. So they could control it that way by saying how much you can spend on petrol or car or airplane tickets because you're only allowed a certain carbon allowance. And lastly, they can control what interest rate they pay to each individual. So it doesn't have to be the same interest rate to everybody. You can say, okay, the poor people get 15% a year and the rich people get minus 5% a year. They could do that if they want. I mean, they could put in any interest rate they want. They could make your money expire if it's not spent after a certain date. So they could say, okay, we're in a pandemic. We're going to give out a check to everybody because they're all unable to work. So everybody gets their money into the CBDC wallet, but you've got 30 days to spend it. If you don't spend it in 30 days, it's gone. Poof. Like a bit like the coupons you get from the shops, which have got an expiry date on them. So there's many things which can be done, which the government might say it's a very good thing because we can control the economy, but the man in the street is going to say it's a very bad thing because I don't like people telling me what I can spend my money on. I don't like people telling me when I've got to spend it, and it's absolutely no use to me as a saving mechanism if the government can confiscate it at any time it wants. It could tomorrow decide that every central bank digital dollar ending in the letter E belongs to the government as a one-off emergency tax. Who knows what could happen? So it's not something I'm going to be voting for if I get the vote on it at all. I don't know who'll be offered the chance to vote, but let's just say if we do, I'll be voting against it. I think it's a dangerous step in the direction of a dystopian world.
I think it is a dangerous step, and it's not, even if people push back and say, well, I'm not a criminal, right? So it doesn't really matter. I think the interesting thing that you point out is, in principle, if the government would have so much more power, and that is scary in and of itself. And they could make things illegal, or that are perfectly fine, or they just have so much more control over your life in the good and bad ways. So it's not just even if you're an upstanding citizen, they might still target you.
Yeah, I mean, it could be, for example, instead of collecting, I don't know if you have VAT in America, but we have VAT or sales tax here in Europe. They could say, well, in future, we'll just collect the sales tax on every transaction you do. So you go around the shops and you're buying things and the sales tax is being collected. Well, it's no different from at the shop having it collected from them at the moment. But, what if you now buy something for your best friend? You buy a car from him or whatever it happens to be, and they collect a sales tax on that. Is that what we want? I don't think we do.
You've talked about this currency reset. So is that what you're talking about, is this movement towards a central bank digital currency and really the phasing out of anything not traceable?
So let's move to the other. I'm going to say one could call it, I'm going to say the government will call it an advantage. Some people may say it's a disadvantage, particularly if they're wealthy. The CBDC could be a tool which is used for a currency reset. I better explain what a currency reset is. A currency reset can take many forms, but the form I'm talking about is where the old currency is, to all intents and purposes, abandoned, and a new currency is issued to run the economy. The reason why that would happen is typically because the old government is so indebted, there's no chance of it repaying its debts. There's no more trust in the currency. There's no more trust in its ability to repay its borrowings. And the investors will no longer fund the government for its wars, for its social programs, or anything else by lending it money. So they have to restart the system with a promise of, we'll never let it happen again. So how would the CBDC play a role in this? So I can imagine a scenario, and this is just a scenario because there are other scenarios out there. This is not definitely the way it will play out, but I can imagine a scenario where they one day say, every transaction you do either has to be through your CBDC wallet that you carry on your phone, or through your CBDC wallet held by your bank. So we have two types of CBDC. Your bank will hold a CBDC wallet for you, and you have your phone, which has a CBDC wallet, and your bank will have your other money. Your other money is not CBDCs because they're not liabilities of the central bank. So we have two types of money. We have dollars and we have dollars. The dollars held by the bank and the dollars held by the CBDC wallet, which are liabilities of the central bank. And in the early years, you'll be able to move your dollars from the bank to your CBDC wallet in your bank. Just tell your bank, please move 100,000 from my deposit account to my CBDC wallet because I want to buy a painting or whatever it happens to be. And the bank will do it. When it's in your CBDC wallet, the bank won't be able to lend it out because it's a liability of the central bank and it's your money. It's a bit like the cash in your pocket. But when it's in your bank account as the other type of dollars, the dollars we have today, the bank can do what it likes with it. It can lend it to whoever it wants to. So we could get to a situation where the debt situation of the government is getting a bit dire and people are speculating against the dollar, speculating against the government bond market, speculating against the currency. They're buying up goods. The shops are empty. There's quite a bit of civil unrest, and they want to kind of control things a bit better. One thing they could do is say, well, as an emergency measure, we're going to limit how much money you can move from your bank account into your CBDC wallet. It's going to be limited to a certain amount per person. Let's say for your telephone wallet, maybe I'm going to say $10,000 or $20,000 or pounds or whatever your currency is per month. And if you're doing an investment transaction, it'll only be allowed for certain types of investment transactions, and there'll be a list of those. And it won't be allowed if you're doing too much of it. Some kind of limit, because we don't want people speculating too much for or against certain types of things. One of the things are perceived to be making the system go wrong. And little by little, you find the pips get squeezed, so less and less of your old money in the bank can move into your CBDC wallet. So you might have, for example, an Apple bond priced in US dollars, and it's not maturing for 2 years. And now it's reached maturity, and you'd like to put it in your CBDC wallet because that's the only way you can spend the money, except there's a limit. We don't know what that limit will be or why that limit will be there, but it could be a limit, and now you can't move it. So effectively, your old currency, the maturing Apple bond, and the treasury bonds you hold, and your deposits that you have in the bank, gradually become less and less usable or not usable at all. It could go very, very quickly. It could be literally an overnight thing due to a national emergency, a war or an earthquake or some natural disaster. But it could be a gradual thing that you slowly find the bottleneck squeezing and getting tighter and tighter. And eventually we end up with a situation where you're literally unable to move your old money, your old bonds, your old cash into the new economy, because everything's operating in the new economy. Any money which is received for commerce or business is passing through CBDC wallets. Your salaries are coming into the CBDC wallet. You're paying your taxes with your CBDC wallet. Everything you buy is with a CBDC wallet. And your old wallet, or your old bank account, literally, you can't move the money into your CBDC wallet, which makes your old money effectively worthless to you. Might still have a value, and you might be able to trade it with somebody on the secondary market, perhaps through a black market for CBDCs, but it's not worth one-to-one at that point, because you can't move it into your CBDC wallet at all. So we could then find a situation where the government is now running the economy on the new CBDC, knowing it doesn't really matter at all what happens in terms of speculation against the dollar, or and I say dollar, it could be euro, it could be pound, or it could be yen. Doesn't matter what currency we're talking about. It doesn't really matter what's happening about the speculation in the old currency, because that's not affecting the economy anymore. The only thing which can affect the economy is the CBDC. So we gradually shift into a dual currency system, or a replacement currency system, where the CBDC dollars have replaced the US dollar ostensibly one for one. There's been no, but you can't spend the old dollars. So the government's liability on the national debt is in the old dollars. So they can pay that off, print it off as much as they like. It won't affect the economy. It doesn't matter how many billions they pay off or print off. It won't change anything, because people can't do anything without those old dollars. So who are the winners and losers if this happens? Well, the man in the street's not going to be a loser, because he's going to be looked after. They don't want a revolution on their hands. So as this happens, I think we'll probably see that we do start to get a universal basic income. Not very much, but be enough to live on for most people. If you have a small amount of money, you won't be affected, because it'll just be business as usual for you. You'll move all your money to the CBDC wallet. There'll be no restriction. You can move 10 or 20,000, whatever the limit is, which is probably more than many people have got. But the major holders of large balances in fiat denominated assets, which might be bonds, for example, treasury bonds or corporate bonds, they will find that their assets as they mature are undeployable. The winners will also be the debtors, those who have borrowed the money, the people who borrowed the money. So if you happen to be a large corporation, if you've borrowed a lot of money, you now have a bond which you have to repay, but you're repaying it in what is effectively a defunct currency. So you're booking to your profit and loss as the value of the old currency goes down against the new one, against the CBDC, you're booking an annual profit, or maybe an instantaneous profit, because you've now got a liability which was worth 1-to-1, and now it's worth 0-to-1. The winner is also the government, because the government had a very large national debt, and now it has a national debt in a defunct currency. The winners could also be, and this will depend on the rules of each country and the regulations, but potentially it could be the man who's got a home with a mortgage, because if you think about it, the mortgage is a liability which is contracted under the old system in old dollars. It's repayable in old dollars, but those old dollars are effectively going down the tubes towards zero. So you suddenly have a lot more equity in your home, because the liability you had is in old dollars. I mean, that's not actually new. It's actually what's going on today with the rate of inflation. Your house is going up in value over time, and the value of your mortgage stays constant. So because the currency is being devalued. What I'm really talking about here is the speeding up of that process, so the equity in your house goes up that much faster. And of course, if you have a credit card debt denominated in the old dollars, that could well be stay in the old dollars and be worth that much less. So what does that do for the world economy? It's an amazingly good thing for the world economy, because suddenly we have a situation where you have a government literally unsaddled by its national debt. Of course, they'll be taking on new debt, because they're going to bail out the pension funds in their country. They're going to bail out the poor people. They're going to bring in a universal basic income, all sorts of things like that. But they're starting from a debt to GDP ratio of 0 in the CBDC. And it doesn't matter what the debt to GDP ratio was in the old currency, because they're not using it anymore. So the government's a winner. Corporations are a winner. But I'll come back to that in a second. But let's look at the man in the street. The man in the street's a winner, because his mortgage and his credit card debt now in a defunct currency, and he can re-borrow against his house to spend money. That's what people have always done. So whether he can borrow to do home extensions, he can borrow to buy the things he wants to buy, borrow to go on holiday. People always borrow against the value. If they have a lot of equity in their house, they feel they can borrow. So the man in the street will be happier to borrow. Also, the man in the street will have less money being taken out of his pay packet to service the national debt, which doesn't exist anymore. So he'll have more money to spend, which is, now we come back to the good for companies. This is very good for companies, who not only will see that they've got a lot more turnover, but we'll also see that they have a lot less liabilities, because those liabilities in terms of bank borrowings and bonds that they've issued are now in a different currency. So who's the loser in all this? Well, it's the wealthy, it's the bank holders, those who hold a lot of the old currency. It's the foreigners, the foreign nation states like Japan and China, who hold a lot of US Treasury bonds. UK does as well. Many countries around the world hold dollars. They're all losers. And of course, individuals who, if you happen to be in Africa, you happen to have a dollar balance somewhere, a lot of dollars tucked away under your pillow, well, they're going to be pretty useless. So there'll be a lot of losers. That's definitely true. But each country will look after its own citizens.
No, one of the things that makes me think here in that kind of situation is, well, how then in the new central bank digital currency after the currency reset, how does the US regain trust? How do they issue bonds? How do they, won't people just not trust even the new currency anymore because the old currency went to zero?
So if it happens suddenly with the old currency going down the tubes very, very rapidly, there will definitely have to be some sort of backing for the new currency. And I think the only sort of backing we can realistically have is gold. That's the only option. Many countries have a lot of gold. Many countries don't, and they're going to be in trouble. But I think a gold-backed currency would be a situation which is inevitable if we have a sudden loss of confidence in the existing currencies of the world. And I think if one of the G5 currencies goes down the tube, the others will probably follow fairly rapidly. I think the dollar might be the last standing, but all of them are vulnerable at the moment. And when one starts to fail, we could see every citizen in every other country saying, God, maybe we're next. I better do something about it. That sets off the panic as people try to change their currency into something more tangible. Gold will be an obvious beneficiary of that in terms of if you have an ounce of gold will still be an ounce of gold before the currency reset and after the currency reset. A bar of chocolate before and after is still a bar of chocolate. It doesn't matter whether the price afterwards is higher or lower. That's an irrelevancy. It will be lower, by the way, because there'll be less wealth on the planet. A lot of wealth will just be destroyed, but it doesn't matter. Your position, if you own tangible assets, your position will be maintained. If you hold fiat denominated assets, you'll be going backwards in the ranking of wealth according to the amount. Now, the man in the street is going to say, well, didn't affect me anyway. And as for the rich, it serves the right, that they were born lucky, they got rich, and they can afford to lose it. I'm sure Bill Gates will be all right with his yachts and his houses, and he's not going to suffer, is he? And but serves him right for losing his billions. I mean, I don't mean Bill Gates, but whoever it is, they're going to think about the rich as being an undeserving lot. At the same time, the rich are going to be saying, I did rather well out of this because, yes, I had a few millions in the bank and a few millions in bonds and so forth. That's all a bit of a big pity I had that. But it was only X% of my assets. Luckily, most of my assets are equities, gold, silver, Bitcoin, houses, commercial property, works of art, heirlooms, yachts, all the things I own. I'm okay, Jack. So it'll be, in a way, we could call it a debt jubilee or a debt forgiveness program, disguised basically in a way where they just start to issue a new currency, which gradually or suddenly replaces the old one. Did I answer your question, or was there another part to your question there?
No, I think that answers it. I mean, if it does happen suddenly, you say that, it would need to be backed by gold. And mentioning precious metals, then it seems like if there was going to be a currency backed by gold, a lot of people say, well, there's not enough gold. Well, obviously, there's enough gold at a particular price. So what do you think will happen to the value of gold if we actually back the currency by gold?
Well, if you tried to back the currency that we have today by gold, and not a new currency, gold would have to be many, many multiples higher. I did a few back of the envelope calculations, and it depends on how you do the maths, but we could be talking over 100,000, we could be talking 30,000, or we could be talking $8,000 per ounce. So there's a wide range of things depending on how you do the maths. So what needs to be backed by gold? Well, do we just need to back the currency in circulation, which is around 2 trillion? If it's only 2 trillion, we know the Treasury's got about at market value about half a billion. 500 billion of gold at market value. So that would mean the gold's got to be 4 times the current price to back the money which is floating around the system as current accounts or as currency, which is issued. But if, on the other hand, it had to include the money in the banks or the Treasury bonds, then we're talking in the hundreds of thousands of dollars per ounce if we're talking about the existing monetary system. But if we go into a new monetary system, a new dollar, a new CBDC, whilst it might be 1-to-1 against the old dollar initially, at the end of the day, we're going to end up with a situation of infinity to 1. So gold price in the old currency will be infinity because it won't have a price anymore. And in the new currency, it might be a half or quarter of what it is today. But it'll still, and as I say, an ounce of gold will still be an ounce of gold. And if we do go into this kind of situation where the old currency is effectively being bottlenecked and you can't move it into the new currency, well, of course, people are going to have a great deal of distrust about the new currency, the CBDC. So then there'll be a big question mark about whether that needs to be backed by gold as well. So I think there's a fairly good chance that in the years to come, and I don't think it'll be many years, we will start to see currencies once again being backed by gold. I can imagine they might be backed by something else, and obviously there's a lot of talk about Bitcoin would be the thing, but governments don't really have enough Bitcoin at the moment to do that, so I don't think that's likely. Would they back it against something else? I don't see how you back it against real estate or government assets or other things. I think it's got to be gold. I don't think there's any alternative, really.
Do you see a change, I guess, geopolitically then in this new system if we have a new dollar? One of the advantages we've had with the dollar being the world reserve currency is we can export a lot of dollars and we can be more wealthy, I guess, here in the US that way. Your perspective on that, is that going to change in the new system?
The first country to back its currency by gold properly will have that dominance. So I think China's not got enough gold yet to do it. USA does. It would be a good move if the USA suddenly said, right now, gold's $8,000 an ounce fixed against the dollar. And there might be some restrictions as to how much you can change for obvious reasons, but it'd be a very good move, and that the dollar would regain its dominance very quickly. So I would say that's why countries are acquiring gold, because if we go into a new type of world order, monetary order, in other words, we have a new type of Bretton Woods style conference, those who hold the most gold will have a seat at the table, or, well, actually, if you have the most gold, you'll be calling the shots. Those who have gold will be at the table. Those who have no gold at all, and Canada would be one perhaps, might not get a seat.
Many people have been talking about how these other countries like China have been accumulating gold. But I guess it's important to remember is at least if the US has the gold that it says it has, that we right now, it seems like probably have more gold than China or these other nations.
Yeah, America's got the most gold at the moment, according to the official statistics. And I think if we get into a situation of the trust in the currency starts to deteriorate, it would be a good opportunity for some legislation in the USA to reback the currency by gold. And it's got to be a plausible backing, i.e. one where you actually believe you could take your dollars in and get yourself a gold coin.
Well, I guess that's reassuring, at least if the U.S. has the gold that they say they do. I wanted to move to kind of like, what can people do right now to prepare for this? Obviously, holding precious metals is one of the ways. You also, one of the things you've mentioned before is that you really love in crisis, you love finding undervalued stocks. So, are stocks still safe through this reset is the question. And also, people have retirements, right? They have 401ks, IRAs, they have pensions. What is your take on people's assets going through this reset? Which ones are safe and which ones maybe people should reconsider?
First of all, on the subject of getting your money out of the bank and putting it in something else, one of the things you can do if you don't have a lot is to buy the things you might need next year now. So home extensions, a greenhouse for your garden, next year's exercise machine. I know we all plan to do exercise next year. But why not buy your exercise machine this year, your razor blades? I mean, these are small things. You could buy your tin food. I mean, that's really getting down to prepping, and I'm not really at that level. But next year's birthday presents for your nieces or your grandchildren. There's a lot of things you could do to reduce your exposure to a bank now in terms of normal expenditure by accelerating what you will be spending into this year. The second thing you could do is invest in other assets which are more likely to retain their value. Now, one of the questions was, what about stocks and smaller companies and so forth? Will they have a value? I think so. I think companies in general will be far more valuable if we have a reset. But if we don't, I'm absolutely sure they're going to survive and do well. We've been through countless recessions, countless crises. I've been investing for 50 odd years in equities, and trust me, there's never been a year where the crisis of that particular year seems to be far worse than all the crises we ever had before because of how it could go wrong. And then it's over and there's a new one for the following year, and that seems to be the worst one. And when we look back on all these crises we've had, they don't seem that important in hindsight, but the one we're in right now, of course, always seems far more important. We're on the brink of a world war. We've got the banking system about to collapse. It all seems terribly bad, but probably 5 years from now, we'd be looking back at that and saying, that was nothing. Look what's going on now with the civil war and blah, 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 or whatever it happens to be. There'll be a new situation which will be worrying us. And stocks have survived. Companies survive. The companies around the world are run by boards of directors who, in general, are very smart. They're very clever people, and they know how to navigate the woes of the world. Not all of them survive, but collectively they do. Obviously, if one company doesn't survive, another company picks up the slack and gets its business. So if you're invested in a broad range of companies which do things that we want and need, and broadly speaking, we need everything that companies do, more or less, you're probably going to be all right if we go through some sort of financial crisis, a currency reset being one of them, but there's many other crises which we'll probably come out the other side with the same companies still doing business, still selling what they're selling, still buying what they're buying, and probably still, I'm sure of it, still paying their dividends. Now, if we go into recession, company and profits decline generally, you might see a fall back in your dividends, but for the most part, companies aim to increase their dividend irrespective of what happens to the profit of their company. So dividends aren't perpetually on an upwards path, but in general, they're on an upwards path. So if you're buying companies with a view to getting the dividends, that's something I do in my retirement because I have to eat. So I have to buy companies which pay dividends. And I'm expecting my dividend flow to gradually increase in line with GDP over the years. I mean, I'd like to try and think that by picking the right company, I might do it a bit faster. And it goes without saying, when you buy a low dividend, high growth company, you expect the dividend to grow faster than if you buy a high dividend, very mature company where the dividend should grow slower. So there's your choice. I like to own a bit of both. But I think companies will survive. Your other question was about retirement funds. I think we have a crisis of any sort, including a financial or currency reset. The government will look after retirement funds and retirees. I think they're going to do that because it's kind of it goes with governments to make sure your retirees don't starve or your population doesn't starve. So I think people we're probably get a universal basic income to go with that. So I don't think I'd worry about your retirement funds. But of course, if you have a private retirement fund on top of your government-sponsored one, that might be considered to be too much and not worthy enough of compensation. And if your retirement fund happens to be invested in bonds issued either by companies or by foreign governments, there's going to be no question of some foreign government bailing out your pension fund if you lose all your value due to a currency reset or because that currency went to zero. I mean, you can imagine if your pension fund invested in, let's say, Argentinian peso bonds, the Argentinian government's not going to say, oh, poor you, we're going to give you some compensation. But if you happen to be in Argentina, they might say, well, everybody gets a certain handout to make sure they don't starve. So in retirement funds, I would say if you have to invest in bonds, invest domestically. but it's not my favorite investment. I'd be investing in anything you're allowed to invest in. That could be real estate investment trusts, it could be equities, it could be Bitcoin, it could be gold, it could be silver, it could be I don't know what else you're allowed to invest in North American pension funds, but whatever you're allowed to invest in, if it's got some seemingly tangible value outside the control of the government, it's not a liability of the government, I think that's a better bet than in holding fiat-denominated assets.
Definitely. Well, Clive Thompson, we really appreciate your time today. We'll have to have you back on to really continue to track this with you, because it's an ever-changing world out there. But we really appreciate your insights. If people are interested in learning more, where can they find your work online?
So I write once or twice a week on LinkedIn. It's the only place I write. You won't find me on Twitter or Facebook or any of these other social media platforms. People are welcome to get in touch with me via LinkedIn, not email or anywhere else. And I do respond to half a dozen or more messages a day from people who've got situations they'd like to discuss, whether it be, do you think I should buy 1 kilogram bags of silver coins, or would I be better going for a gold eagle? Those sort of questions. Or I've just inherited some money. What shall I do? I get. I don't charge anything. I've got nothing to sell. I'm not working. It's like a retired doctor. I help people free of charge, pro bono, in terms of telling what I think they could or should do in their situation. Just as a doctor who's retired will have people coming up to him and saying, "I've got a bad back. What do you think?" And he'll give them some thoughts. Without them necessarily having to traipse down to the doctor. So I'm happy to do that for everybody. In terms of LinkedIn articles, I'm currently writing an article which people might like. It's an amazing story about a gold coin which went missing shortly after 1933 from the US Mint. It was effectively stolen from the mint, and the Secret Service got onto it, because you can imagine if any money goes missing from the mint, it doesn't matter that it was only $20 in this case. In this particular case, it could have been $1 million, but this $20 took the Secret Service on a 69-year mission to recover the coin and melt it down. And it's one of the most amazing stories I have ever heard about a coin. So that'll be going up on my LinkedIn profile in the coming days, and people might want to have a look at, follow me and see what the story's all about.
Fantastic. Well, we really appreciate your time today, Clive. We'll put a link in the description of this video to your LinkedIn page there. Thank you once again, and God bless.
Thanks very much. And it's been great to speak with you. Bye-bye now.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for February 26th through March 4th, 2024, while supplies last. First, we feature backdated 1-ounce silver maples at $3.39 over spot. We also have 1-ounce gold Valcambi bars at only $59 over spot. And finally, we're offering our choice 1-ounce Palladium bars at just $119 over spot. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.